Scott, how much do you need to get started investing? Is there a set amount?
I'd say that's a $64 question, but then it sounds like that's the answer as well. So let's avoid that. The good thing with investing is you don't need a lot of money to get started. The only thing you want to be careful of is the costs associated. Don't destroy your investment. If you're paying $20 in brokerage, you don't want to buy $30 worth of shares, right? The brokerage is simply too expensive as a proportion. The good news is plenty of low-cost brokerage out there. You can now trade with CommSec, for example, for $10 for any trades under $1,000 worth of shares. So they're starting to come down a little bit, which is nice. Generally speaking, we want people to start saving small amounts, building up to large amounts, and then investing that new cash. So the question of how much you need to get started, it's a different answer to how much you need to buy a share is one question. To get started, start with $1. Start with 50 cents if you need to. Put money in a jar. Start to build a savings account that you can then use to start buying shares. We talk about investing, we think it's just the buying shares bit. Investing is everything from saving the first dollar right through to buying that first share, and those are two different things. So start with a cent, start with 50 cents, start with $1. When you're buying those shares, once you've started amassing that money, try and keep your brokerage to below 1%, maybe 2% if you want, of the amount of money you're investing. So that means if you're paying $10 for brokerage, you want to be buying probably $500 to $1,000 worth of shares. Now, the higher your brokerage, the higher proportion that is, the more it hurts your returns. So if you're going to pay 2% to buy and you're going to earn 10% as a return, you're giving up effectively a fifth of that return in brokerage costs. You want to be very careful with that. But over the long term, if you're going to hold shares for 10, 20, 30 years, the brokerage is much, much less important than it otherwise might seem. So don't pay more than you need on brokerage, but start with as little as you can get away with, because just getting started, the old journey of 1,000 miles starts with a single step. The momentum of getting started is far, far more important than trying to be too clever and too absolute about it.
There's generally, I really love your point about, the investing process along the way, the 50 cents to the dollar just in the jar. Is there a set amount of money, though, that you actually need to spend to actually buy that first share? Yeah,
generally speaking, most brokers have a minimum parcel of $500. So that's probably the minimum amount. You can now start to put aside some money in. Again, we're not sponsored by CommSec at all, by the way, but they have a new app called Pocket, which lets you buy exchange-traded funds, which is a whole other conversation, for about $2 a trade, I think it is. So you can start really, really small with $10s and $20s and $30 at a time. So there are great ways to get your foot in the door. And then as you graduate to larger and larger amounts, either because you save more or that compounds to a larger amount, you can then make different decisions. So if you're buying direct shares on the market, $500 is the minimum. If you're buying something like a CommSec Pocket or other things, you can do it with much, much lower amounts of money. And that's the best place for some people to start, because it simply gets you on that ladder, if you want to call it that, an investment ladder. It gets you started, and that's where the power lies.
And I think it's a really interesting point as well about the keeping the brokerage percentage to a minimum of your overall investment. I think another good point is that it costs that initial amount to get in, but you also need to consider getting out as well. So if it's $500, you put the 2% in for the initial brokerage, and if you want to get it back out, it's another 2%.
Yeah, that's right.
It creates a fairly high barrier to cross.
Yeah, it's also why we recommend people invest for the long term. So yes, if you're going to buy it today and sell it tomorrow, you got to take those $2 of brokerage in your account. If you can invest for the long term, say you invest for 5 years, on average, your shares will go up maybe 70, 80% over that period of time. That'll well and truly pay for both lots of brokerage. So yes, keep the amount as small as you can, but a bit like tax, you shouldn't be investing for the tax deduction. You should be trying to maximize your after-tax return. So it's the profit you should be focused on, not minimizing the tax, or in this case, minimizing the cost. So yes, don't pay more brokerage than you should, but don't miss the forest for the trees.
Very good point. Thanks, Scott.
Thanks, Ryan.